Hello traders, welcome to the Forex Boat educational session. In this video we will be talking about the euro versus the United States dollar, how to trade this currency pair. We'll talk about why the euro US dollar is the most popular currency pair chosen by novice as well as experienced traders. You will learn when is the best time to trade the euro dollar, how to find dominating trend and spot a trading opportunity. You will have deeper understanding as to how long should you keep the trade open. In other words, whether you should choose intraday trading or swing trading. And in general, what is the best time frame to use for analysis. And also, we'll show you what indicators can be used to make your trading more comfortable. And before we get started, smash that subscribe button in order to follow all the videos we are posting every single day. There are lots of them coming every week, which are educational videos, trade examples, and technical analysis. So do it right away and let's get started with the euro versus the dollar. So why euro dollar is the most popular currency pair? The European economy and the United States economy are the largest economies in the world, which makes them very liquid. Anyone can buy and sell huge amounts, so this makes it just attractive for large institutions. Another point is extremely low spread. We all know that euro dollar offers 1 pip spread. Some brokers offer spread below the 1 pip, 0.3 pips, 0.1 pip, and some brokers don't even have the spread for the euro versus dollar. And of course, this is extremely attractive because when you open the trade, you will not have a loss in your account. You will straight away have just a zero, making the scalping trading extremely attractive on these brokers. And overall, low spreads are extremely attractive for scalpers who target 1, 2, 3 or 5 pips take profit. This means that they're quickly in, quickly out, and they can trade the news, they can trade fast market, they can trade slow market. Unlike other currency pairs, I don't know, for example, pound Swiss franc, sometimes you have spread of 7 pips, sometimes 10, it depends on the broker, but it's huge. By the time you get into the zero, the market has moved quite a lot. So that's why euro dollar is being so attractive to many traders. Now the question is, when is the best time to trade euro versus dollar? And I think the answer is quite obvious. When the European session is opening and when the United States session is opening. So these times are quite good for getting into the trade for the euro versus the dollar. On the trading view, there is an indicator which called sessions. So you just type in search sessions and it's the very first one. We choose it. And now what we have is sessions. We need to go to settings and just remove Asia time. Press OK. And now we have in green is the European session, in red there is a United States session. You see they overlap. So at 15:00, it depends of course on your time, but my time 15:00, these two sessions overlap, and this is when the most trading volume occurs. We can also add volume indicator to see what sort of volume is going on during these overlap times. So yet again, we go into indicators, type volume and choose volume. And right there, you can check when is the most traded volume occurs. Like we see that during these quiet times, there is almost no volume. Now, European session opening, volume increasing. Yet again increasing, yet again increasing, and it's always the same. And sometimes you can see that when these sessions overlap, the volume is getting huge, and this is when opportunity might present itself. We need to see where these volumes are extremely high or higher or abnormal, higher than normal. So we see that here as well, and this is where you want to take the opportunity. This is where you want to take this opportunity. You see, this is very easily spotted. So here we have average, 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 and then we have above average volume. So this could be that opportunity. It always depends, of course, on your strategy. Another very useful indicator is, of course, news. If we go to settings on the chart, we here have show economic events. You can also see past events or only future events. So past events can be spotted at the bottom. We can click on them and see what were the news. And based on that, we can also analyze what drives the market, what actually gives this trading volume. Consumer confidence, huge volume. This is a big news. So we need to see this news which are in red, not yellow, but like here in red, because these are high importance news. Now, if we click here, we have a lot of news and only 2 high importance. So this is where we need to pay attention to the market. Let's go to the most recent price action and see what sort of news did drive this huge move to the downside. Here, not so important. So these are all average news because we can see they're yellow or orange. Now, if we click here, consumer confidence, these are red. So these what could have driven this rally after the news. So not straight away, but only on the next session. So you must consider that the market might take some time before reacting to the news. Or you might think of it that upon the news release, all the information that has been presented is already in the price. Either way, just check on the news, see the market reaction, and then you can build the strategy based on it. Another tool that very useful, I'm using 50 and 200 simple moving averages. You can use exponential, but simple is probably better for the novice trader, just through my personal experience. What we need to see is the trend. If we want to trade the euro dollar, we need to spot the trend. So how do we do that? What I'm looking for is the rejection of the 50 moving average from below, but price must stay below the 200 moving average. Let me show you an example, just find it. Like here we had the rejection of 200 moving average, but we need the rejection of the 50 moving average. Like this example here, you can see this was the rejection and the price was above the 200 and rejected the 50. Now to trade it, of course, we would need to mark this level because it is extremely important level. So there could be 2 cases to trade it. Either wait for the new higher high to confirm that this is a bullish trend or wait for the breakout. In either case, you can get an opportunity, buy or sell. And we can find multiple cases like that. You just need to scroll and search for them. Right there, we see straight away another opportunity. Rejection. And here was the same. After break to the upside, break above the resistance, there was this rejection of the moving average. So we wait for the new higher high, we wait for this break and close above, and here you have this opportunity. And if you don't want to enter it because the European United States sessions are closed, so you might want to wait for the European session opening, then take your trade. You have all the confirmation, so this is the fast trade. You open it at the European session opening, you close it at the US session closing. Simple. So we have this fast trend to the upside. Let's see more examples. Here we have the same scenario. Price is below both moving averages. It has rejected the 50 simple moving average, but at the same time it rejected the 200 simple moving average. So we can mark this level as key resistance and trade it, for example, next session. Or we can wait until new lower low is produced. So that was here, price broke and closed below this price previously made. So here is our opportunity. This is the European session opening, so shorting or wait for the better price. And here you go, this was quite a nice move to the downside. Also, don't forget to check the volumes, trading volume. What is happening when price is rejecting these moving averages? Whether the volume is extremely high or low, this could give you also indication as to how active traders are. Because if there is a heavy volume and price is failing to break above the moving average, this means that it's a very strong resistance, in our case of a downtrend. And here we could have waited for this strong volume. You can see it's abnormal. It's higher than previous 2, 3, 4. Yeah, it's higher than quite a lot of them. So here was the strong volume after the rejection. So this was your confirmation. Wait for the correction, enter the short at this resistance. And yet again, quite a nice move to the downside. But now we are coming to the question as to what is better to trade. Is it intraday, just open, close throughout the European or United States session, or hold it for some days? The quicker you get in and quicker you get out is better, because you're not staying in the market, thus not risking. It's better to stay out rather than stay in and wait for your profit. Quick in and out is better, but you must be ready to take quick profits. You must be ready to act, and you must be ready to follow the market in order to either change the stop loss, close your trade prior to the take profit, and so on. So the disadvantage of the intraday is that you have to be active trader. You have to stay in the market. But the advantage of the swing trader is that you can trade 4-hour time frame or daily time frame. For example, if I take 4-hour, we don't need to watch the market every hour to check what is happening. We can check few times a day, that is enough. And if you go to the daily time frame, once per day is plenty. But of course, you cannot place a large lot size, because your stop loss will be much higher than the one you will be using during the intraday trading. So here, smaller lots, smaller profits, it's more, everything is slower. It's like a slow motion trading, and you have time to think, to analyze, and so on. So if you're not so much of an active trader, it's better to go with the swing trading. But if you are watching the market all day, of course, intraday is the way to go. So speaking about the day trader or swing trader, what is the best time frame and whether you should use multiple time frames? Well, from my experience, it's better to use multiple time frames, of course, because you have more information, but it takes more time. It's really time consuming. Probably the best is to make the strategy that is comfortable for you, whether it's a single time frame or multi time frame. It's up to you. I think the best is to trade the way you enjoy it. You know, many people will say best is swing, best in intraday. It doesn't matter. As long as you enjoy it and you have the strategy that works for you, this is the way to go. There is no other way. But there are, of course, certain advantages and disadvantages of the swing trading versus the intraday and multiple time frame analysis and single time frame analysis. For example, single time frame analysis, it really straightforward. You just watch for this opportunity, but you will have much less of them because it's just one time frame. If you go with a few time frames, you will have X2 opportunities to spot. And if you confirm your trade, for example, you trade just one time frame, but you confirm it with multiple time frames, you will have a much higher probability trades. So these are the advantages of using multiple time frames. I would suggest to use it, but if you don't like it, if you don't have time, just trade the way you enjoy. In other words, there is no best time frame to trade. There is no good in swing trading or bad in swing trading versus the intraday. It all depends what you like. You just need to understand the advantages and disadvantages. Well, I think we've talked about everything. And if you want to see more examples like that on other currency pairs, just click the like, subscribe to the channel, ask questions, post comments down below. Let us know what type of the content would you like to see, whether you would like more on the euro dollar, on pound dollar, or other exotic currency pair. Just let us know and we will try to do our best and provide the content that you want. I appreciate you all watching this video till the end. It means a lot and it means that you enjoyed it. So till next time, and profits to you.